Cash flow or capital gains? Which strategy is better? That means to flip or to receive monthly income. Want to find out more? You've got to watch this. Alright, so hi everyone, this is Mr. Joshua Tan and welcome back to my channel once again. Now, capital gains or cash flow strategy. Now, capital gains is basically to buy, hold, and then you sell for decent, handsome profit ideally. On the other hand, cash flow strategy, right, is when you buy and then you want to continually receive monthly rental income, even if you work or you don't work. Or in other words, that's passive income. Although I have to tell you that there's no such thing as complete passive income. It's either higher leverage or lower leverage income. And passive income just means that you're on a higher leverage position where your returns outweigh the efforts you put in using your time. Now, capital gains strategy. Mainly people who want to go for capital gains, right, you are going to be your own tenant. That means you are staying in the unit yourself, which can be good because you are the one who is working, because you're control. Your biggest risk factor is you. Your most reliable person is also you. And as I mentioned earlier, there's principal savings. So when you go for something like a buy to hold yourself and to sell in the future, you're actually forcing yourself to save along the way also. Because you either save here or save somewhere else. If there's no one chasing you to save, you won't save, you spend it on your Gucci bags. But if somebody force you to save, then you will save and you don't see the amount. Then when you sell already, you collect your cash proceeds including your principal, which often turns out to be a pretty good sum when you make the right investment. Okay, but on the flip side, there is mortgage interest cost that you are paying because right now, remember, you are your own tenant. The reward is when you exit. So when you buy for capital gains strategy, you have to already plan for your exit. Are you going to exit 4 years, 5 years, 6 years, or maybe 10 years when your child finish primary 6 and also finish secondary 4? Project correctly with all the figures holistically assessed. If you need some guidance on how you can assess right, you can always reach me in my WhatsApp, which is in the description below. And when done right, a capital gains strategy can actually help you to compress time. Let's take for instance, you buy a property for rental and then you make, let's say, an amount of 1k net cash flow per month. So 1k times 12 months, 1 year you get 12k. 10 years, 120k. If you buy and sell a property, let's say any one of it on this list over here, you see a profit of say 200k on a smaller size unit. Already outweighs your 120k over 10 years, which you can make in 4 years. So effectively you double or even more than double your rate of making money. You cut half the time needed and you can already roll on to another investment for better growth. We are betting on Singapore. The fact that Singapore economy is resilient and stable, and the fact that they have built in so many cooling measures in the market that it creates a very safe, stable and steady environment. Think about it, with so many cooling measures, if let's say the property price were to be taking a hit, what can they do? They can remove the cooling measure. Okay, if you want to learn more about cooling measure and how they actually make a more safe and stable price in the property market, you can check out my other video, which I'll put somewhere in the screen over here. But you know that when you buy into a property like that, capital gains, you're also going in line with the idea that the government is not out to crash the market. They are not out to make the value of homes drop such that people feel less wealthy. In fact, if you ask me, based on a fiscal policy, the tax income that they have, I would reasonably see that they want you to invest in private property. It's only a matter of restricting access to those who have the capital to do so safely. Now, conversely, now that we've talked about capital gains, we'll go on to talk about cash flow strategy. For cash flow strategy, you are likely going to rent out the property, which in other words also means that you are not your own tenant. Your tenant is the one paying for your monthly mortgage, your principal and your interest. Now, that is provided you find the rental that can cover your monthly mortgage and cover your maintenance fee and cover your property tax to ensure that you have a net positive cash flow. And also bear in mind that for property tax in Singapore, it is a non-owner occupied property tax. That means you are not paying an owner occupied property tax, you're paying non-owner occupied. And this can amount to a considerable sum on top of what you are used to be paying if you are to be staying in the unit yourself. That being said, yes, the tenant pays the principal for you, accumulates your savings for you, and pays the interest, take care of the interest to the bank for you. However, you must pick a good tenant or at least buy a property in a good tenant pool location, because you are after all risking your investment based on the fact that the tenant will keep their job to pay you the monthly rental. You're also exposed to risk of early termination, especially if you have a diplomatic clause in your contract, or even if you don't have, and should the worker say want to just suddenly leave the country for good, then you need to be prepared that rental will also cease to be paid. So discretion of finding a tenant is very important, and certain maintenance costs that maybe few people will tell you about a tenant may not take care of the unit as well as you do, so you just gotta keep in mind that maintenance cost, maybe set aside a small petty cash fund to take care of the maintenance cost. End of it all, capital gains can give you relatively faster building of your capital, of your equity. It is a balance sheet game. Okay, it's not exactly a cash flow game. It can be time consuming, although there's a way to do it that you can stay effectively for free. And those of you who are already using my reserve fund method and are living in your next condo purchase, you know what I'm talking about. Meanwhile, cash flow strategy gives you monthly income, gives you freedom of time when done correctly, but the accumulation of wealth can be relatively slow compared to capital gains. So which one suits better for you? It really depends on your individual circumstance. Now, the biggest mistake that you want to avoid is to go into a cash flow strategy when actually capital building is the better place for you right now, because the capital amount size of each individual differs. Alright, if you need any help in assessing, once again, my contacts in the description below. Just click and reach out to me. Otherwise, I hope this information has been insightful for you. Once again, this is Mr. Joshua Tan. Don't forget to like and subscribe, and I'll see you around.